Shahab, how are you? Everyone see the Euro chart up there? How the rest of my trading warrior brothers and sisters? Good. Okay. So yesterday to me looked like just a shakeout of weak longs under this low. Stop hunt, people that got long here put their stops here. Don't do that. Don't put them right under a swing low like this. The low here was 73 and the low of this break was 64, 63. Give it 25, 30 pips tolerance in case you get stop hunts. Normally, and nothing's happens all the time. But normally, if it's a stop hunt, it's not going to take out levels, under swing highs and lows by more than, I'd say, 25, 30 pips. If it's a stop hunt, they usually don't drive it that far. It's usually, ballpark 10 to 20. So you probably want to give your stops a little bit more tolerance. If that makes your trade more than you want to risk, then you're using too much leverage, right? So, I mean, Blake says some Skype, it's a slow market. So I don't know how many times I have to remind people to let their trades breathe, but use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Use less leverage. Okay, so what are we going to do from this day forward? Or how
Use
about,
more leverage.
oh yeah, use max leverage when you trade the market. Turn $1,000 into 50K. But if you're wrong for 10 minutes when you use max leverage, your account will be blown away. Don't use max leverage. Ever try and turn $100 into 10K, Steve?
Not even on a demo account.
Okay. Anyway, I don't know. Some people think it could be done. They see things on the internet. 4,000% return
Of course,
today.
it could be done. It could also be done that
Today.
you jump off an airplane
Yeah.
and you don't end up dying, because that has actually happened. I mean, there is.
Wow.
Yeah.
Without a parachute, huh?
Without a parachute, no.
Wow. How did it feel when you hit the ground, bro?
Not to me, but I
Oh,
mean, it is a
I
real. It
thought.
is a
See,
real
that would have
incident.
explained everything.
It is a
What?
real incident. There was a guy that crashed actually in a barn. So that was it. Keep in mind that due to gravity, the maximum speed you can accelerate to is not that amazingly high. It's like 200 something kilometers per hour. So, if you have something to actually slow you down, you can survive a jump from whichever distance,
Wow.
because that doesn't make any difference. I mean, either you jump from 200 meters or you jump from 2,000 meters, it's the same thing. You're going to get the same speed.
Isn't it
Huh.
great? You hear about effects and physics in this
Yes.
webinar. Nice.
And it's
Terminal, it's called, I think in
have
English,
you
it's called
noticed,
terminal velocity. Yes.
yeah, have you noticed, Stel, that Steve 230 kilometers per hour is really not fast? That's okay. I mean, look at look at who's talking about it not being fast. And oh yeah, Elliot's got it. Anyway, so you know what, guys, I see this as kind of a continuation formation, rectangle, and if you just measure this, you're talking about 120, that would take you to 113, and that's up here. And so, at these highs, we're boxed in these bands on the daily.
Since you're looking at the Euro USD, that was the chart of the day. I did the chart of the day yesterday. So
Yeah,
that was the chart of the day because in essence, this is a range now, right? I mean, we found support at the
yeah,
previous support. If you see on the daily, especially, I mean, we didn't close below the previous low on the daily. So it's either a double top formation. Yeah, there you go. And as you see, if you extend that low that we found yesterday and a few days before that, as you will see, it also coincides with the previous high and then
yeah.
previous low. So this is an important 110.70 is an important support resistance trend line in essence. And below it, we trigger a double top so we can see lower prices.
Yeah, I wouldn't want to see it under like 1040.
Yeah, although technically, as I told you, if we go below 110.70, then we
Yeah.
have a 100 double top target,
Oh,
which then points to 109.70.
okay. You mean close or trade under there? Because we traded under there, but we can't.
Typically
Close.
speaking, close, the only reason
Yeah.
in this case I didn't use close is because when we're talking just about 100 pips
Yeah.
and your plan is to wait for a close below it, what if it closes 50 pips below? Then there is no trade anymore on the table, you know what I
Right.
mean?
That's true. Yeah. Yeah.
If we were talking about a 400 pip range, then you can easily say, wait for it to close below it, right?
Uh-huh. Okay. So you put out a bearish pip
No,
or
no,
a
no, no,
bullish
no,
pip?
no, no,
Bullish
not,
pip.
not intending to trade this because my bias, as I wrote, still remains tilted bullishly.
Weaker. Bullishly. You're right.
Yeah,
Weaker
yeah, yeah.
dollar. Yeah.
I do believe that the Euro USD can end up squeezing people as the cable did.
Well, I got squeezed yesterday trying the yen for turnaround Tuesday. Okay, I don't know why they didn't go for these stops yet above this high, but I'm in from the mid 70s and low 90s. I didn't expect this. I thought it was kind of they were trying to just sucker people in on Monday up here. It was too obvious, but I started after they took that out. So we'll see. I mean, it's all yields, right? So we're attacking the high of yields recovery right now, yesterday, right? So we backed off last week, and that's what gave us our yen sell off. And so now both the yen is back at not quite last week's
If
high.
Blake doesn't do it, I'm gonna show the bonds because we didn't have a look at them yesterday. Today,
Okay.
needless to say, if you remember, we had shown that the Bund has broken below a head and shoulders formation, and the 10-year Treasury at the moment is testing key trend line support. But we're gonna show that later.
Okay. All right. So I think I showed this down here. And I thought that we would attack this with at least equality. And here we are right back at this resistance level. So, everyone's expecting continued acceleration, which would make sense if the S&Ps haven't topped and they're going to 3,100 and the end's going to 110. This should continue. But I look at the 30-year just a little bit here, and it looks like it could fade one more time. And I think what would be unexpected now would be for the 30-year to pull back to here before it blows again. And that would imply low risk off. The other thing that's making me think there might be some risk off is the way the peso is grinding up here. Looks like we'll have a pretty good breakout here over 1925. So those are my thoughts coming into today. I think there's at least one more wave to the downside in the dollar, and the way I'm playing it is short US dollar Swiss right here. So, this is a nice little rally. I think next time we take out this 98.50, we should get some pretty good acceleration. So, if you really want to play it tight, which I don't advise, it's this high, but I think you could short it and have risk here, which isn't bad, 40, 50 pips for a Swiss short. And to make sense of silver and gold, you have to make sense out the yen hammer. Okay, so the yen was strong yesterday, gold got hammered.
By the way, when you started speaking, I mean, a few minutes before you started speaking, we had one of those usual little flash crashes in silver. I
Oh,
mean,
yeah.
yeah, it moved lower like 20 cents within zero time.
They don't do that as much anymore.
Yeah.
Before it bottomed, it would happen every Sunday night,
You
remember?
can see that
Yeah,
wick there. You can see that
Yeah.
lower wick there. Yeah.
yeah. You like it here?
Now recovering. Not sure yet.
Yeah, me either.
If you're asking me if I like to
It's
buy
another range.
and
Look at
hold
gold's
it,
a range, silver's a range,
yeah.
everything's a range.
If you're asking my opinion for the medium to long term,
Oh no,
like
that's
it
too easy. I want to
very
know what you
much.
think right now. I mean, I don't, medium and long term, I think we're all going to get older. How's that for a call? Even you, Steve.
That's a call that comes through every single second.
Okay,
so how can I doubt that?
All right, so in the medium, here, let me give you some CNBC analysis on gold, and then I'm going to turn it over to Blake, okay? Gold seems to be holding support here, could rally back to resistance unless it's rejected and takes out the lows. But if there's divergence at the lows, it could recover unless it fails again, and then it could head lower and stabilize at that point.
Yep, more or less that's it.
Huh?
More or less that's it.
Now, is that actionable, or is this stuff actionable? Action. Hi, Amanda. How are you today, hon?
You like to hear her voice every time you log in, huh?
I do. I'm a fan. What can I say? I'm a fan. So this stuff is actionable. So we got about 5 working here. Huh. Aussie yen. You're Aussie. Noke. What's a Noke? A macro guy? Yeah. Dixie, nice Andre on the Dixie. So he's looking for what? 95.30. Okay. So this stuff is actionable with much better than a 50% hit rate. Uh-oh. All right. So Blake, you have all kinds of squawk boxes going besides this thing on our site, right? You have boxes you get Bloomberg flashes and everything.
Yeah. Hey, good morning, Dale.
Good morning, buddy.
How you doing?
Good. So yeah, slow, but Euro sideways, Blake. Think we have a shot here for it to hold and turn.
I'm so irritated with it. It's just, it came down. I actually got stopped out pretty close to where we're at right now. I didn't re-enter. But I ended up selling the U.S. dollar Norwegian krona, and I'll share with you the reasons why in a little bit.
People ask me, Dale, if I golf, and I say no. It's more aggravating than trading to me.
Well, with the euro dollar, my cost average was like 111.25, like right here.
Yeah.
And I was expecting a breakout higher. Obviously, with the turn lower, I put my stops at 80. I think the stops are at 82 because I just wanted to get out if we broke through here, because I was worried if we would possibly get a double top. I stopped out. We did probe these lows, and as you can see, we've built like more or less a channel. I didn't re-enter. I did not re-enter long because I think we are range bound. I wouldn't mind trading it on the long side again. If we dip back down here, I have other reasons to do different things. So,
yeah.
I took the trade off, and I'm a little irked that we just didn't get any follow through. But the one thing that I have to always go back and look at is I have to look at the weekly chart, and the weekly chart was, is a pretty strong week last week. Now, obviously, we had a little bit of a pullback, or we had a pretty aggressive pullback, and it's still a couple of days out to see how the week is going to shake out. But the euro just didn't trade up the way that I hoped it would. I was hoping we would attack the 200-day moving average, and I thought it's possible we'd fail up here. What I was thinking was going to happen is more like this. I'll draw it for you, and then I'm gonna have to move my drawings again.
Okay.
What I thought it was gonna be is more like this.
Yeah.
I thought we were gonna hit the 200-day, fail up there, come back down, and I was prepared for that. I was not prepared for what happened, which was this, which was a slight. Now we have like a slight descending channel that looks like yay. But I think it's, this is a situation we might be dealing with.
Remember yesterday when I was talking about the euro being weaker than cable, that
Yeah.
those aren't the kind of days I like to, fade the dollar. Well,
Right.
today's kind of the opposite, where you have euro stronger than pound. So these are the kind of days where I'll go with, shorting the dollar and buying euro and things like that. I just hate to fight the spread. And I learned this before there was a euro. I used to trade
Deutschmarks.
the Deutschmark Swiss would tell me, would give me that type of relationship. So so just something I've noticed with euro is it rarely works for me to fade it when it's a weak sister coming into a session.
There's probably something to be said for that. I think algorithms have kind of thrown off so many correlations over
Those
the years.
bastards.
I know.
They're killing us old dinosaurs out here.
They really are. They are. No, but so personally, it's not something that I do.
Yeah.
But let me show you something really quick that I Stelios wants to come on to talk about Brexit. He's got a lot to say about Brexit in a few minutes. So just letting you guys know that. Yeah, no, that's what I heard. All right. So this is the CCI, or the the Thomson Reuters commodity index. And there's a trader in our chat room. His name's Crex. I believe he's an Aussie, but he's in late in the session, and I was doing let's do monthly, weekly. Hold on, let me do weekly tenure. Let's just do that chart. So I was doing the evening analysis. He's like, hey, there's this one trader that I follow. He showed me this, and I was like, I was looking at the strength of the Aussie and the strength of copper, and he pulled up this chart. It was a different chart, but it's the same chart. It was like on TradingView or something. But so I pulled it up on Bloomberg here, and I was like, he was just saying that somebody had pointed this out about how there's a breakout of the CCI, and I'm like, crap, I hadn't followed the CCI in years. I really haven't, and I'm like, holy cow, that is really breaking some pretty big trends here. And you could here, let me grab
I never knew how to use it. What is the CCI?
It's a commodity commodity index, continuous commodity index, but it's like
CRB. It's weighted differently.
Yeah, a little differently, but it's a good gauge to see what commodities, broad-based commodities, are doing.
Yeah.
And then Bloomberg has its own, but you can. I just want to point out, you can see that we're actually breaking higher over the last few weeks. All right, over the last few weeks, we're breaking higher now.
Even copper's recovered, and that's been one of the weak sectors, the base metals, and they're acting better.
Yes, exactly. So let me see the Bloomberg. Here, Bloomberg Commodity Index, the BCOM, right here. Very similar situation, and you can see, you can just do something like that. I mean, we're just, I'm kind of roughing it here, but you can see that these commodity indexes are starting to turn positive. Now, one of the things that you have to think about is that there's probably going to be a US China trade deal. I'm just, running with that assumption and still running with that assumption that ahead of the elections, there's going to be, there's going to be something done. So therefore, the demand for certain commodities is probably going to be stronger as inflation continues to ramp up globally. And you can see the commodity indexes are starting to firm up here, which in essence makes me want to be long, certain commodities. And one of the commodities specifically, and I talked a little bit about it yesterday. Well, one of the commodities specifically, what might be crude oil, but and I believe copper. Some of the demand for some of these, these broader based industrial used commodities, um, and therefore I wanted to be short the U.S. dollar, Norwegian krona, and you heard me talk a bit about it yesterday, where I feel that the U.S. dollar, Norwegian krona has peaked, and I just wanted to sell rallies because I think the Norwegian krona could turn against a lot of different currencies, euro, the U.S. dollar, so on and so forth. So I started. Well, I'm starting to short the U.S. dollar Norwegian krona. I shorted it last night, pretty decent size at 917, and I just covered it up this morning, right around here. So I just, my average short was at 917 because I added a little bit this morning. So I was short at like 919 and added some down here. My cost average was like 917 and change. I closed it this morning as we got to 913.70 is where I covered it right here. So, but what I'm trying to tell you here, and this completed a little intraday double top. So I'm selling rallies now, but I want to be long some of these commodity currencies, and I'm a little bit more gun shy with some versus others due to risk aversion, and what I think that if the market does see a little bit of risk aversion, what might happen. So, but if we see a China-U.S. trade deal, I believe like the Aussie dollar is going to do very well, and I'm still running with that theme until I've got really good evidence that there's going to be no China-U.S. trade deal. I'm just going to assume that there is going to be one. So the reason why I say that is because now I'm trading. I want to trade the Aussie long, but I don't necessarily want to do it against the U.S. dollar. If there is a risk off, I think the US dollar could firm up against the Aussie and keep the Aussie somewhat contained. However, a China US trade deal would put the Aussie above the 200-day moving average and we'll spike up higher. But under risk off situations, I believe the US dollar Canadian is also a candidate for a rally against the Canadian, because the Canadian just hasn't rallied a whole lot. Unlike the Aussies bounced a lot, I think the Canadian's a little weaker. So therefore, I'm trading the Aussie Canadian on the long side, and the Aussie Canadian I think is really trying to form a nice little base here, and above like 91 and change, we could see the 200-day moving average and quite possibly even further than that. But I'm trying to buy some of these commodity type of currencies near term, and the Norwegian krona is hot on my list, even though I'm out of the position right now. I am selling rallies. I'd like to sell a rally at currently, and then also the Aussie Canadian is a position that I'm long, and I am looking to add. I think this is a pretty bullish formation that we see technically right now, uh, because it is, this is a bull flag pattern, as you can see. Pullback has been less than 38%, which is really strong, and we're really trying to break higher right now. And I think that a move above 91.20 or 91.30, somewhere above here, is going to really let loose. We could get pretty good move here. Let me see. I'll just clone that. And so, yeah, anyway, that's what I'm doing right now. I just, trying to make back scratch back a little bit of what I lost in the euro dollar. I had a good month last month. I was long very aggressively the New Zealand yen at the beginning of the month. At the end of the month, I was long some, euro dollar, which really added to my P&L. And then, I gave some back the last few days. And, so I'm a little miffed about the euro dollar just as a whole, but I still think there's a lot of opportunities, and I think that I'm got to look into some of these opportunities that are not such major currencies right now, because we are really range bound. If you look at the euro, the cable's not going to move anywhere. Probably before the election. So it's, we might be stuck in a 128, 130, maybe 131 range. I don't, the only reason why I say it could maybe break a little higher is just because, I think a lot of people are trying to short into this rally. So I think the risk of a squeeze there is pretty good. Dollar yen, I don't really want to mess with it while it's below the 200-day moving average. And, even though we have this big inverted head and shoulder pattern, and the only way this plays out right now is there's a significant US-China trade deal that gets done, then, all yen pairs are going to break higher, I believe. I think that's your risk. Your risk is if you're short any of these yen pairs, which euro yen, pound yen, Aussie yen, whatever yen, the risk is you wake up and there was a China US trade deal announced while you were sleeping, and this thing's going to be up in your face pretty aggressively. So that's, if you are trying to short these, just keep stops manageable, keep them manageable. So, because you are going to take losses. The fact of the matter is, like yesterday for me, I took a hit in the euro dollar, and I gave back some of my, gains that I had at the end of the month last month, but it's part of the game, it's part of, trading. It's just, I think what's really important when you're trading is know when to go in size and know when to be, when to press. And I like to press when I know a trade's going in my direction, in my favor. Like I was more than happy to press the euro long if we broke above the 200-day moving average and closed above there. I would have pressed with a pretty aggressive long position and move my stops up to break even. But unfortunately, it didn't play out that way. So I had to, just get stopped out with, with the size that I had, which still was pretty decent size. But I was really looking for, a move that looked more like that. Just didn't come to fruition, and that's going to happen, guys. It's going to happen. If you think you can get away with trading with never taking losses, you got another thing coming. You're going to take losses. I'm lucky if I'm right, 50% of the time, but it's the size of my trades when I'm trading and when I'm right that make all the difference in the world, and that's important. That's important to understand as a trader. I can fiddle faddle around a little bit with, mediocre size, but when something I'm dead set on and I know that my risk parameters are in check, I can go in a lot bigger. So anyway, all right, guys. So anyway, that's kind of what I'm thinking right now, and hope that all helps. I'm going to bring in Stelios because he wanted to talk about Brexit for a while.
He said he has nothing to say.
No, he said he's writing a book on Brexit. So let's hear it.
Spell it backwards.
Yeah, no, I know you got nothing to say. Stelios is like, I have nothing to say this morning.
Since you indirectly pitched it, Stelios has not written a book on Brexit, but he has written a book about LIBOR, which is going to go
coming out in a couple of months. But
which is going to come out in a couple of months. So stay tuned.
Yeah. Hey, Gregorios asked, "What size do you trade, Blake?" Do you want to know my underwear color as well? I'm wearing.
I think he's your accountant. He's your accountant, Blake.
I'm wearing polka dot underwear right now. If you're curious, look, I'm not going to divulge what size that I trade for my firm. I trade for Gelos Capital, out of Greenwich, Connecticut. FX Macro, if you're familiar with who that is. That's the gentleman, and he's the firm owner. And there's a few of us traders that he's put together over the last 15 years. And he's you know, we were all invited to be with him. And I trade pretty big size. So, you know, and I can trade bigger size if I want to. So it's, you know, but
it's none of your business.
Yeah, I mean,
I'll say
let's put it this way. I'm not trading, you know, I'm not trading, you know, a few $100,000 here and there. It's just, it's not worth my time. So anyway,
Okay.
Gregorius said no, because you keep mentioning it. Well, it's just because I always try to, when I'm teaching you guys as traders, it doesn't, my size is irrelevant to what your size is. You might be trading a $5,000 account. Somebody else might be trading a $100,000 account. So if I'm like, oh yeah, I'm trading 100,000 of this and 500,000 of that, you have to think about how it relates to you. So if like normally I'm like, for example, I'll just give you an example. So if normally I'm trading, you know, a size that's comfortable to me, let's just say it's one lot. One lot could be, you know, 10 million. It could be 1 million. It could be, you know, 10,000. It doesn't really matter. I'm trading one lot. If I get more aggressive, you know, because it's a breakout, or I see that, you know, we're at support and I know my stops are really close and I want to get long because I feel that it's the right trade and I want to step up my position, it might be double that. So instead of trading one, I might be trading two. But I know whenever I'm doubling up on a position, that I can keep my stops within close proximity, because the last thing I want to do is add to losing positions, not knowing where my stops are going to be. So whatever I do in the market, so let's say I'll just give you an example. I'll give you an example of a working trade that I have. Okay, just really quick, and then I'll turn it over to you guys. Like the Aussie Canadian. So I'm long, right? So I picked it up 2 days ago at 60. If you were in the Forex Analytics chat room, you knew I picked it up the night, not last night, the night before last. So I bought it here in the 60s. Actually, I think that this is an hourly chart, so it'd be right around here. So I go back and something around, like right around here, you know, because I was playing it off of this this bull flag, and I didn't think we were going to retest these lows, which we haven't, and now we're trying to break out. So, you know, I've got, let's just call it one. I've got one lot, right? One lot, again, could be 10 million, it could be 1 million, it could be 100,000 or 10,000, doesn't really matter. I got one lot. So I got one lot, and now it looks like it's going to break out higher, right? So now we clear this resistance, which is 90, 94. This is kind of where I wanted to be notified that it was breaking out, but I really want to see it above 91 cents. It's getting to the point where I need to start watching it closely again. So now let's say we ratchet up above 91.01 or 91 cents. Like, let's just say for argument's sake, we get here, like right here. And now I'm like, okay, I'm going to add. So instead of having one lot, now I have two, as we're breaking above there. But then I can put my stops, because my average already, my first position was here-ish. Then if I'm adding one up here, so now I can move my stop to right there, so now I know that my stop is literally at break even or maybe slightly below break even, but I'm not out of pocket risk a whole lot, even with double the position size. But I'm confident that the momentum's carrying forward. That's what I mean about, like, I'm trading size. Size is irrelevant in what I'm talking about. It's more relevant. You got to think about, like, is it, you know, 1 times my normal, double my normal? You know, I very rarely get, like, I'll very rarely be triple my normal trade size. And your normal trade size might be, like I said, it might be 100K, it might be 1 million, it might be, you know, 200K, you know, maybe 20K, I don't know. But very rarely do I go like triple my normal size, unless it's news induced, and that's like a once every in this market, once every 6 month, maybe 8 month time that happens, because, you know, I happen to be long or short something and it's going in my direction, and then there's some news that comes up behind me that really fortifies my decision making. Like, for example, if I'm long the Aussie Canadian right now, and all of a sudden, like here within seconds, a U.S. China trade deal is mentioned, or it's done, the Aussie Canadian is going to spike up. It's gonna do one of these, and then as it's rallying, I'll probably be adding aggressively to it. But when does that happen? It doesn't happen often, and it happens maybe a couple of times a year. And like I said, in this market, it's been, we've had so many false starts that I'm very nervous about adding too aggressively, because you just never know. So anyway, I hope that all helps. And it okay. Oh, and he said, okay, got it. Inverse martingale or pyramid. Yeah, you know what? Let me just stop you really quick. If you ever employ a martingale type of strategy, you can just write yourself off in this business. You're going to get killed. I see guys in our chat room, and I try to question them, that it's like, I know you've been in this losing trade for ever, and you keep adding to your position. You're if you keep doing that, you're going to get knocked out of the business. It's just plain and simple.
Personally, Blake, I've only seen, I'm not saying it's the only one, but I've only seen one person do it successfully. Yeah.
You have to, if you're gonna add to a position, it's a losing position, it has to be pre-planned, which I do. I don't think that I don't, because I do. But I already know what it is ahead of time. I see people that are like, oh, I'm adding here, I'm adding here, I'm adding here, I'm adding here. It's like randomly adding to losing positions. There's an old saying, and one that goes around our office, losers add to losers. Pretty simple, right? Unless it's a pre-planned, like if I'll do what's called a Fibonacci fade. It's just a kind of a strategy that I do. But let me just give you an example. Like, let's say I wanted to short the euro pound. I might want to short it at this fib, that fib, and that fib, and then I'm putting my stops above the top. But I already pre-calculated it, saying, okay, if I get short here and I get short here and I get short here, I know I'm going to have 3 lots total. Again, 3 lots could be 3 million, it could be 30 million, it could be 30,000. It doesn't really matter. I'm just giving you guys an example. If I know I'm going to have, if I know I'm going to short here, here, and here, if we get there, and then my ultimate stop is right here. Whoops, right here. This is my stop. I already pre-calculated it all. I'm like, okay, if I get here, here, and here, and I'm in a full size trade, my stop is right here. What's my loss going to be? Oh, my loss is going to be 20 grand. Okay, great. That's within my parameters. I can do that. But there's a lot of people that just randomly they sell or buy because it's going against them, and they're like, it's eventually going to turn. Yeah, if you have that attitude, you're going to lose. You're going to eventually get killed. You will be knocked out of this business. I've seen it. I've been doing this for 20
I did it, Blake.
Hey, it's not uncommon.
I blew up.
It's not uncommon. It's not uncommon, Dale. And
I didn't know what it was called.
Right.
Yeah. I needed antidepressants afterwards, so I'll tell you that. But sometimes everyone has to learn the hard way. I had to learn the hard way once.
I hope these words don't fall on deaf ears, and that's why there's certain I have to question certain people, certain things, because and martingale strategy. So the opposite of that is I add to winning trades, especially if they're going in my direction, obviously, and if there's a good reason for it. So one of the things, last thing that I'll say, and then I'll turn it over to Steve. See, these guys didn't even have anything to say. Now I've got all sorts of things to say. So one of the other things that I'm
Gregorios is an agitator.
No. I think it was a great question. I'm glad. I'm totally glad.
I peppered him yesterday. He's a brave guy. He came back.
No, I'm glad that he had asked. or question this. So like, for example, I'm long the Aussie Canadian. I'm just giving you this example again. Let's say over the next 24 hours, it moves up towards, let's say it moves like this. It goes up to 91.20 and it stalls, right? Which is, it's realistic. And I get an ad here, right? I get an ad. And now I'm long a bigger position. My stop is like right here going into Friday. What do we got going on Friday? Canadian jobs report, right? So one of two things are going to happen. The jobs report, it's either going to be a good piece of data or it's going to be a bad piece of data for Canada. So, and you can beat yourself up and trying to figure out what the hell the data is going to be, because I don't know and you don't know anyway. So, but if the data is good, the Canadian data is good, you're going to get a double top and the Aussie Canadian is going to break down and I'm going to get stopped out. Whoop-de-doo. You know, I get stopped out, I lose some, maybe I get a little slippage, I might lose a little bit more than I thought, but I'm out. Flip side is it's a really weak piece of data out of Canada, and then we get a breakout, and then guess what I'm doing here?
You're adding even more.
I'm adding even more. Yeah, and then I take my stop and move it right to the breakout point. So, you know, and that's just putting myself in a position with opportunity. So do you see how I'm pre-positioning myself ahead of the Canadian data? Now, this may not work out. I mean, I may get along a little bit. It may stop me out tomorrow afternoon, Thursday, right? Yeah, tomorrow afternoon, and then rally on Friday, and then I end up missing the whole thing. But that, it doesn't matter. I'm putting myself in that position. If you don't put yourself in a position for success, then you're never going to get into it. So,
Wow.
Okay, I'm done. You guys
That
are
was great, man.
have a great one. Okay.
All right. Good hunting, Blake.
Thanks, man. You guys have a good day. I'll see you.
Blake, before you go,
Yep.
How many contracts are you going to trade today? How much size are you going to do?
See you guys.
Okay. All right. Bye.
Bye.
You had to get that in.
Steve, you can pretty much
Steve?
start off, because I have literally nothing to say.
Steve, how much do you have in your checking account right now?
Oh, that is very, very easy for me to answer. I never have more than 2,000 or 3,000 euros.
Just 1 month of living expenses.
Yes.
Yep.
Okay, and it's because you don't trust the bank.
And for a good reason. When I was warning everybody here in Greece before capital controls, don't keep your money in Greek banks. And, you know, I was very, very strict about some people because I really deeply cared about them.
Yeah.
They thought that
You were crazy.
That I was exaggerating. You know what I mean? Guess what? Those that thought that I was exaggerating, then they started calling me, asking me if there is something they can do.
Right,
and they said, yes, you can learn from that mistake and be less stupid next time.
Yeah, you were such a compassionate guy. Don't go if you want a shoulder to cry on, don't go to Volgy.
Listen,
that's all I could say, right?
In all honesty, when I call you and I'm like, for example, you know, Yorgo, you know, how have you been, bro? I haven't spoken with you for 3 months. You know, I've been very busy, but I want to tell you something. Get your money out of Greek banks now, because, you know, within the next few months, as things are going, we're going to have capital controls. And, you know, you want to have a debate with me on that? I'm like, okay, dude, listen, I told you what I needed to say. You know, you do what you consider best. Okay. But the question I always ask those people, and they had no answer, is, what do you have to lose if I'm wrong? And what do you have to lose if I'm right?
Very true.
Right? I mean, what is the risk reward in case 1? And what is the risk reward in case 2? Guess what? The vast majority of those didn't understand the concept of risk reward.
Yeah. That's all right.
Yeah.
You did your duty.
They now learned it. Yes.
Stell, how many gold coins do you own, and where's the location?
Nice one.
Anyway.
No comment.
All right. Okay. I'm through. Steve, I know people always ask, you know, what's the size of you? It's just unbelievable.
It's okay. It's an okay question to ask. I mean, it's not.
Guys,
it's not
all right. I don't understand why some people are irritated. Grigoris asked one question, which I find nothing wrong with. I mean, somebody
Yeah.
can ask it. If you want to answer it, you answer it. If you don't want to answer it, it's also 100% acceptable. And then he correctly pinpointed that Blake is what Blake is doing is an inverse martingale, which is exactly what he's doing, because that's what good traders do. Bad traders
Do the
martingale.
martingale.
Good traders have the
Why was it
um,
named that, martingale? After a
that is
guy or?
Martingale was a mathematician. I'm
Oh, okay.
90% sure about that. Don't quote me on that, but I'm 90% sure he was a mathematician, actually.
Okay. I have one for that though. If you use the martingale, you're going to need Florence Nightingale.
You know something?
Huh? You'll need a nurse.
I actually worked for a guy that martingaled all the time. But there is two big differences with, that's not to give hope to people that do that, because let me give you the background here.
Claudia's a nurse.
The background here is that this guy had some very, very, very deep pockets. That's one.
Send me a DM on Twitter.
And two is that he was always doing trades, carry trades, buying currencies that are seriously battered, that offer a very high yield. So, for example, he did that, like, what was it, 4 summers ago with what was happening in the ruble in Russia, and then he did it with Turkey and the Turkish lira. Needless to say that even this guy, at some point, I remember that summer with the Russian ruble, that position was like almost 3 million euros out of the money. I'm pretty sure that he was sweating bullets. I mean, he was playing calm, but I'm pretty sure that he was sweating bullets. So personally, not one of the things I want to, do or want to see somebody doing. And, at least he had very deep pockets and he could stay enough in that position. By the way, the fact that it was the wrong position to be is obvious, because the guy ended up making 1 million euros from that. But, is it a good
anguish?
Is it a good trade when you lose a year of your life? A, and B, when
No,
at some
it's
point you're 3 million out of the money and you end up making 1. I mean, in essence.
Can I just add one more thing to my experience, since I did it, but now with the kind of size you're talking about? When you're stuck because you've been averaging into a position, and then you're sitting there hoping, waiting, whatever, for it to turn, and you're seeing multiple opportunities in front of you, and you're paralyzed because you're so deep underwater, you're afraid to take on any more risk because you're maxed out on risk. So
Correct.
You see multiple opportunities come and go and pass you by. Correct. While you're sitting there hoping. And
that was exactly the situation, exactly as you describe it. That was exactly the situation. I mean,
my saying is hope is the oxygen in our lives, and the carbon monoxide in our trading.
You know how many trades we passed over during that period, because it's not only being paralyzed because you don't want to take more risk. It's mostly because, it's, this human psychology is like, okay, I'm going to take a few more trades. So what? If this trade blows up, none of the rest will matter. You know what I mean?
That too.
So, yeah. So I think for him, it was mostly that mentality. Like,
it leads to millions of negative consequences.
Yeah. I mean, it was like either the Russian ruble is going to work out, or we're in deep shit, even if in between we make, some good trades.
Barney Rubble worked out with Fred Flintstone. They'd go to the gym together. Okay, I'm muting myself now, guys. All right.
So, Stelio, seriously, no developments whatsoever. I guess he's tuned out because he's also trading as we speak. So, okay, let's go to the chart. So I already mentioned the Euro USD and what I posted as chart of the day yesterday. You can see here why, right? this is a little range here, so it can prove to be a double top, or it can end up being, a corrective horizontal pattern and breaking out from here. So 110.70 quite key area, and no wonder why. But if you have a look at the DXY, you're going to see more or less the inverse pattern. There it is, right? So the DXY, same exact deal here. A little range here, possibility of a double top, possibility of a double bottom. We'll see a breakout of this range. This range is roughly, let's see, 97.10 to 98 exactly. So yeah, 0.90. So, theory says that we should extend that range either below or above, depends on, which of the two trend lines cracks first. Now, having to do with risk, there is nothing here to add. I mean, the S&P has still not reached this beautiful confluence of resistances up there. You can see it. Nice confluence of resistances anywhere between 3,107 and 3,125. That ascending wedge as well. So let's see what happens from there. In the time being, if you look at the NASDAQ is exactly at its equivalent ascending wedge. There it is, currently testing the confluence of that wedge and the 127% extension of this move lower. The IWM also at a key area here. You can see it, if you remember, we were looking at it the other day. IWM has been trapped for many, many months in this range between 145 and 160, 161. So currently at that resistance. So as you see, two of the indices exactly on resistance, one of them getting very close to that. We know that the RSI is still the VIX is still diverging. We know that the RSI in long-term time frames is diverging. We know that the fear grid index was at like 86 with a maximum of 100. So we have plenty of indications that risk is overbought here. So I would caution longs here, because we might see some type of a pullback. It wouldn't surprise me at all. Now, having to do with USD NOK that Blake mentioned, I'm on board with that. And not only that, look at USD SEK. We were talking about the USD SEK, saying that the USD SEK has rebounded from this wedge, but look where it failed. I mean, we retested that horizontal support resistance area as a resistance, and it seems to be failing there. So once again, be very careful with this ascending trend line support. I think that if we slice through it, USD SEK can really start accelerating the downside. Obviously, if that happens, it means that the Euro USD is also going to be performing well. The USD Swiss is going to be turning lower. You name it. Now, add to that the fact that the cable looks quite constructive here. I mean, this looks like a textbook triangle, right? If you want to look at it from an Elliott wave perspective, you can call it a pennant. Otherwise, it's up to you. Both of them are, continuation formations. So, needless to say, I'm not very persuaded about this rally back in the dollar. I actually think that probably the dollar is a good opportunity being short here. I mean, the risk reward is quite appealing. Okay, and here's the USD NOK we were talking about before. Retest of this broken wedge, and let's see if we can actually continue lower following that. Now, having to do with the metals, as we mentioned yesterday, there's no guarantee that we're going to be headed to new highs from here. I'm pretty convinced we're headed to new highs, but we're in the middle of the pennant here, as you see in gold. So buying it here, where's your risk reward? It has to be a lot lower if you want to be, if you want to be comfortable. So that's a no-go. Here is silver. Just look at it. It spiked before, just when the webinar was starting. Silver was spiking for no apparent reason. It spiked like from 1750. It dumped actually from 1750 to like 70.37. and it has completely recovered that. It's actually positive for the day, but yesterday's candle was quite a bearish one. There's no question about it. So I wouldn't be surprised. Let's delete all that. I wouldn't be surprised if we dip even lower before we can actually recover higher. Okay, regardless, I do believe that silver and gold are going higher. Okay. Now, one more day that crude is, stuck in this confluence of the 50% fib and the 200 daily moving average, I would be quite careful here with crude, especially taking into account, as I said, that multiple indices are at resistance. So I would be careful with that. And now let me switch to bonds, because as I said before, if you remember, first of all, let's start from the bond. I showed this last week saying that keep in mind the bond has broken the neckline of a head and shoulders formation, quite a large one. And last week when we had a look at it, we were like, recovering here like 2-3 days already up. And they said that, listen, as long as we stay below this neckline, you have no reason to be bullish. And as it seems, we had 3 consecutive down days, and guess what? We're now testing the 200 daily moving average. So quite an important support here. If we break through that, I think we're headed quite a lot lower. I mean, just look at this head and shoulders; it's quite massive. So its target is a lot lower. I haven't even extrapolated the target because it's obvious that it's much further, so it didn't really matter. But if we really want to do that, there you go, 165. So the target is 165. So as I said, a lot lower. And having to do with the treasuries, which, as I mentioned initially, once again, at a key support area, you can see here why, right? Very well-defined channel. We had this little period that we, overthrew the channel, but other than that, this channel has worked perfectly. I mean, although overthrowing it here, it worked again as a resistance there, right? And multiple times as support, as you see. So confluence of this horizontal support area and the ascending channels trendline support. So treasuries have to make a decision here. If you really want to buy them, I can see the appeal. I mean, the risk reward is in your favor. Place a stop loss below that spike low, let's say at 128.5. And you can look for a move towards 130.5, right? Back to that resistance. So a very decent risk reward ratio, like something like almost 2-to-1 or whatever, and you have to risk very little. So, but on the other hand, if we break down from here, I'm pretty sure that we're headed lower. Now, if you have a look at the yields, first of all, admittedly, the move higher in the yields is not impulsive in any way, at least not yet. But on the other hand, there is some more room. Yields can run higher. I mean, towards 2%, right? You can see it here. So, at the very least, we can see a move to 2% in the 10-year treasury yield. There it is. Okay, something like that. Let me see if we have any questions. The DAX, yes. If you remember, if those of you that are Forex Analytics subscribers, I wrote during the weekend that the DAX is on its way to 13,200. It was more or less obvious. And, more or less that was fulfilled today. I mean, we came very close to that. There it is. So the question is what happens from here? The DAX looks quite constructive above this, broken symmetrical triangle. But, would you be buying it right here, right now? No, you wouldn't. I mean, you shouldn't. You see, we previous highs there as well. So in my opinion, if you want to, have some exposure in the DAX being long, buying here makes no sense because, where would you place your stop loss? So in that case, you have to hope. This has already happened, so let's change this. So you would have to hope for something like that, right? I'm not saying that it can't move directly higher from where we are. It actually can, but there's no risk reward for you to follow it. So, hope for a pullback, probably towards this like 12,650 area would be ideal, and look to buy there. Why do you think the euro is moving higher? Why do you not consider that it has put in a top and is headed to 109? That is actually an excellent question. Let me go through other questions and I'm going to answer that. First of all, my initial answer, which is something you don't want to hear from a trader, but I have, a decent confidence in myself because I'm not doing that since last year, is my gut feeling. So first of all is my gut feeling. Second of all, I can't blame you if you want to trade it short. Why I can't blame you? Because there is no logical scientific argument why this isn't a downtrend. I mean, it is a series of lower highs. So if you're looking for me to argue that the Euro USD is not in a downtrend, you're not going to find that. But my feeling is telling me that perhaps we've put in a low. I'm not a firm believer of the dollar, quite the opposite actually. I'm not surprised that the market is not aggressively selling the dollar because the market is consisted mostly from stupid people that follow other people. Because as I've said, the fiscal position the US is currently in is the worst fiscal position of any developed country I've seen in many, many, many years.
Just want to let you know our guest is here.
Okay, thank you, coach. Thank you. Sorry, I hadn't noticed the time.
Okay.
But I do think there is a chance that the euro can squeeze higher. Okay, I'm not long at the moment, so don't misunderstand me. I have no stakes here in making that argument, but I can tell you one thing for sure. I will end up buying the euro if I see either it bottoming here or moving a little bit lower and giving us a nice reaction higher. The market is still very bearish the euro, very short the euro, and I think that the same exact thing that happened with the cable can happen to the euro USD. And anyhow, risk reward is definitely in your favor if that's the case, right? So that's why. Okay, coach, it's all
Thank
yours.
you, bro. Thank you, buddy. Okay, Ace. Looking forward to talking to you and seeing your
Can you hear me?
setup and meeting you. I can hear you perfectly, Ace. How are you, buddy?
I'm good. How are you, Dale?
It's very nice to meet you, Ace. I've been looking forward to us having a conversation. So why don't we start off with is why the Twitter handle Ace acronym Ace. Are you a hacker, Ace?
No, I went to school for computer science, but no, not really a hacker. Just kind of went with the name. Ace was taken, so I was like, you know what? Let me just go with something. I didn't want to go the whole crypto handle.
Yes, you could share your screen too.
Yeah,
Ace.
you want us to help him share his screen because I have to jump on the meeting.
You just go to the green box.
Perfect.
It says share. There you go.
Okay, perfect.
Beautiful.
Enjoy.
Okay, thank you, Steve. So, all right. So there's really nothing significantly symbolic about your Twitter handle.
Yeah, nothing too really, nothing too specific.
All right.
So
okay. So why don't you tell us about what you were doing before you got into trading and how you were introduced to it?
So I was actually going to school for veterinarian stuff, and I remember I was in class one day and somebody was bringing up Bitcoin, and I remember when I was younger, like around 2010, I had looked into it initially. So I got really interested into it because it just kept going up day after day, and I was like, wow, what's this? Let me give this a shot. So at school, my buddy was like signing me up with the whole Coinbase thing and showed me on how to do this. So eventually I got into watching the markets and realizing how that stuff worked, but it wasn't working too good for me for the first 2-3 months because I had no idea how to trade or anything like that. So eventually I got into the gist of, oh, okay, so I guess, I mean, to be honest, I just started off drawing triangles and I realized, oh, look, this is pretty much how it works in the beginning, is just drawing lines and triangles. So really got into crypto first with trading and everything. And ever since then, I've just been really expanding into whatever I can get my hands on.
Self-taught, or have there been any influences or mentors that have guided you and showed you some things? Because really, there's nothing new under the sun.
Yeah.
Any people help you out along the way?
Not in particularly, unless I'm looking for like certain indicators that I personally use. That's about the only thing. But no, most of it's just been Google and investing and just watching other people and figuring out what they're doing and just
Okay.
reverse engineering it.
Why did you gravitate towards Ichimoku clouds and this Japanese style of trading?
I had seen somebody else use it, and I found it really interesting the way it kept on hitting certain support and resistance levels and giving off signals on top of my regular just watching the price action in general. So I just
Okay.
found it something that was good and confluent for like higher time frames for me. So it was just something I started off early and seems to be working good for me.
Okay, and why don't you tell us what you have for momentum indicators underneath your candlestick chart?
Okay, so those two are actually just something I'm trying. I have somebody was telling me to start using divergences. So I really want to get into that. So I don't really have too much going on the bottom one, but this is just the stock RSI and just the regular RSI over here.
Okay.
But the bottom one is the awesome oscillator, which I really don't know what I'm doing yet. I'm just trying to get a grasp of divergences as I see them.
Okay, and whoever told you to look at them, the top one with the crossing lines, they both have crossing lines. So are they RSI with moving averages or what? There's two lines there.
So
The
these
RSI I use is one line.
Okay, so that's just the stock, and then the bottom one is the RSI with the EMA on it.
Okay, all right. So you're here with the spider. We have what I call a throwover of a wedge line. What's your take on what's going on here? What's the message of the market?
So SPY has just been going crazy. It's kind of insane to see a breakout like this. First we had my initial resistance up here, and we broke
Yeah.
out clean over through that one. So at this point, I'm just trying to figure out where we would end up heading up from over here. This is the only real thing I can come up with on the weekly, and this coincides with a couple other targets I've been seeing over for order flows like 310. So as of right now, until we can break back underneath over here, I mean, I have no reason to stop playing that same trend.
What are you seeing at 310? Like, yeah, I noticed you're an option trader. Huge open interest in that strike.
Yeah, what I'm seeing is I'm seeing a lot of people buying into this 310 area, but they're also buying for around the end of January.
Okay, so year-end strength, new all-time highs into the end of the year is what they're positioning for.
Yeah, which is interesting because I'm thinking the opposite. I'm assuming that just because of watching just the markets in general for the short time that I have been, I'm assuming we sell off by December, and that's when I'm going to go ahead and buy, because that's what happened last year. We dumped out near Christmas time and then pumped all the way up till May.
Okay, so you're looking for a repeat of last year?
Sort of, yeah. Trump's still in office. I assume him to still be in office again. And if he's in, I don't assume the market's going to go down.
No, I'm just talking about the decline in
Yeah.
December. You're expecting a repeat performance.
Sort of, yes.
Okay,
That's what my assumption is.
Okay, well, let me ask you this: if people believe that there was, that last year is going to be repeat performance, why would they wait for December to sell? Why wouldn't they front run it in November?
So it's getting to that point. So the way I do options trading is I like doing things in 2-month periods for options. And when I got started was around this time last year is when I started observing things in just legacy markets. So I guess back in August, I was telling people that, hey, I'm looking for options trades pushed out until about October time. And then around that point, I'm going to be looking for things around December, because I still think if we're still going strong in October, that November won't start seeing a push off until the end of the month. So I'm kind of going on how I would off crypto, just in the sense of the beginning of the month would automatically be positive for me. And then middle of the month, I'll get a little bit more sense of direction. And at the end of the month, I'll already be in a position. So
you're looking for a mid-month high here. That would be next week.
Pretty much, yeah.
Possibly, right? Or
Yep.
would it be mid-month December?
No, mid-month this month. I would say if we're
Okay.
going to hit a high.
How about on the full moon Monday? Or how about you're laughing at me? don't call me a lunatic.
Oh no.
I'm a lunatic, but anyway, how about Trump opens up another trade front war, another front on the trade war, the 14th with Europe?
Oh, that'll be interesting. I actually just saw news that he was considering taking off some tariffs off China.
Yeah.
I'm not too good on like what exactly all that stuff means, but I'm assuming the market will take that positively.
Yeah. Yeah. Okay. So, what are you doing right now? You looking to buy? Are you buying puts? Do you do verticals? Are you a writer too? Do you take in premium? Do you do risk reversals? What's your style? There's so many ways to
I
skin a
know.
cat in options.
It's unbelievable, and that's the crazy part. I still feel like even though I've only have like about a year experience, and I still feel like I'm super new into this. So as of right now, I'm still only doing naked calls and puts. I am dabbling a little bit into like the spreads. I'm finding that's a little bit more safer. But nothing too fancy. I have a lot of people telling me to get into like the iron condors and the butterflies, but
I
I'm
couldn't
still
wrap my head around it. Yeah.
yeah, it's a lot.
Yeah, it's being the house. You know, there's I said that options are like relationships. 90% of them expire worthless. Do you have you had options go worthless on you that
Oh
you've
yeah,
owned?
definitely.
Okay,
Uh,
and do you have any kind of risk management plan for cutting losses on an option trade so that doesn't happen?
Yeah, definitely. So one of my biggest things with options are if they don't start picking up right off the bat, I have to cut them. The only ones I maybe possibly let expire worthless are the ones I'm stubborn on and the ones that are already prepaid by the market, which I've bought several contracts ahead of time and exited them for profit. I'm already paying with a free position.
Okay, so
So
they double and you take half.
exactly.
Okay, and you've only been doing this a year.
Yeah, only a year for just legacy markets. Prior to that, I was doing crypto for about 2 to 3 years, but legacy's just hitting a year.
Okay, so you're still active in crypto?
Yep, I'm still trading Bitcoin. I'm not trading as many altcoins as I have, and I'm trading USD pairs on regular exchanges that are like more so in the US now.
Okay.
So, but yeah, still in that market.
Okay, what kind of view do you have on Bitcoin now after the stall and then the big turn we had from the 7,300 level? What are you thinking?
Um, we had such a big run up after this push.
Yeah.
So as of right now, until we can break some higher time frame, higher highs, it's really hard for me to say anything. My biggest thing with Bitcoin is if we can at any point clear the 20 SMA on the weekly, that's one of my other biggest factors. My other biggest factors is also the market cap. Um, if we can keep pushing the market cap the whole time and keep over 200, I think that'll go. I think a lot of people are really over optimistic for the end of the year that it's going to be over 10K. I'm not that optimistic about it. I am a Bitcoin fan, but I've lost my own hope in it over the time. So we'll see how it goes. I'm not too bullish on it. I think by the end of the year,
You're
if I
not
had
a hodler anymore?
yeah, not a holder anymore, other than the ones that I was stuck with before and learned the hard way.
Okay.
So
Because it sounded like you were an early adopter that, maybe you did
yeah,
okay.
I got in early. I did
At
okay.
10 years old, how old are you now?
I'm 25 now, but
All right.
yeah,
Okay.
so I got into it I think around 2016 near the
Yeah.
end of it. So it was
Uh-huh.
still fairly cheap.
Yeah.
I just kind of went more the altcoin route than I should have, the more Bitcoin route.
Okay. And you said you're trading majors, you're trading FX. You have a view on the euro?
So I don't trade FX that much. I'm occasionally trade USD JPY, which I
Okay.
technically have more so a long opinion on USD JPY, but yeah, nothing too much on Forex end of things.
Okay. So besides S&Ps, you focus on precious metals or energy or
Yeah,
what?
I was a real big fan of silver and gold. I ended up catching the gold run on this silver run on this, so it's been really fun trading silver. So I'm really looking forward to seeing what happens here. My outlook on silver right now is basically if we can hold this support over here, I think silver should be good to go if we can get this clear over here. So I'm just really looking for a re-entry on silver at this point, seeing if we end up testing this 20 SMA or not. Same thing with gold. Gold is actually a little bit more strange for me because it is currently just going up and down as far as
Yeah,
I'm
in
concerned.
a range.
Yeah.
Actually, that looks like a descending triangle. Since you study triangles, you know there are different type. Descending triangle would be your flat line, like around. Look, you have it drawn around 1480 or
Yeah.
1487, and then you have that downsloping line that you could adjust or use your second one. That's a breakdown under that's pretty negative. Would
Yes.
speak towards maybe what 1420 or
Yeah,
1380, the measured move.
Yeah, I would
It's
say
what, $80, 1400. And do you use the clouds for entries, like the bottom of a cloud or the top of the cloud? And do you know the song by the Rolling Stones, "Hey You, Get Off of My Cloud"?
No, I haven't heard that song. Well, I'm not gonna say I haven't heard it. If I heard it, I'm sure somebody's played it.
Google. It's a Rolling. Have you heard of the Rolling Stones?
Yeah, of course.
Oh, okay. I'm just checking. You're so young. All right. So do you have a service? I saw you tweeting about, people following you on Twitter, or you have your own chat room?
I have my own. I
Just
mean,
trading
nothing
for yourself.
Yeah, nothing like really paid. I mean, I do trading with people and stuff, but yeah, nothing really paid. So I just kind of just share what I know and stuff. I don't feel super comfortable where I want to charge anybody for anything. So just really just tossing around ideas with people. I trade for myself. I use it to pay bills and just get by. I mean, as I go, I'm starting to realize that I don't know. I want to start building more of a long-term type of things rather than the short-term stuff I've been doing this whole time.
Okay. How many hours do you spend in front of the screen every day?
So I work from home in general.
Yeah.
So I'm at the screen on the computer almost 24/7. So I'm looking at some sort of chart at some moment of the day.
So you say you work from home in general. Does that mean you have other businesses and other income streams besides your trading?
Yeah, I work full time currently. So I full-time trade and I full-time work as well.
What kind of work you do?
I
Other
work for
work.
I work for a tech department over at Amazon. So
Okay.
I do some at-home stuff for that.
It takes wisdom to know that. Can you imagine trading without your second revenue flow, your
Yeah,
major job? Can you
that
imagine
is
what that would be like?
that is something I'm really considering at this point. Just because I know just with legacy markets, it would pay off a lot more if I had more time to dwell into the research and things like that. So I feel that would definitely be helpful. So I'm definitely considering that in the next like year or two, trying to go full-time trading versus still having a side thing with Amazon. The main thing I stick with my regular job is security. Obviously, it's good to have side income for doing regular work.
Yeah,
And
because not every. I actually think you should keep it until
yeah,
you really build up a grub stake, because then every trade, once you leave your job, becomes more important to you,
exactly.
and that makes you more emotional.
Yeah, and that's a hard part of trading that I still work on is the emotional end of things. So
Yeah.
I agree with you there.
Okay. Anything else you want to share with us?
Yeah, I've been watching ETFs. That's one of the first things I started options trading, and
Okay.
I just
I
find
trade 'em.
these things amazing. It's just crazy how these things work because most of these gaps up that have been happening when I trade options trade, whether it's in the money or out of the money, it ends up being about a 20 to 40% play on them every time on the gap as long as it's within trend. And
Okay.
this is the one I've been playing for the last couple months, and this has been great. I'm just shocked that it's been just riding up with everything. But
Weaker dollar having being the propulsion behind it. Okay, that's a nice look. What else you have for us? Okay, that's China. What are you thinking here?
China, if we can break through here, I mean, if we have another set of positive news, I don't see why not. We wouldn't go up to at least over here and double top out over here before we go. I was looking into these a little bit and like the individual companies that are weighted on these.
Yeah.
I mean, that's the other reason that I get so worried about SPY at the moment as well, is all of these other companies are weighted on these things and they're all looking like they're getting to the point where they're overbought. So I'm not expecting.
You mean like Microsoft?
Yeah, just like for example, like with EFA, I know like Baba's like one of these and heavily weighted on them, or just in general with even with SPY, I know like yeah.
What is
like you
this
said,
one? a global index or what? What is this one? MSCI.
The EFA one? That is
Yeah,
a good
what's it
question.
comprised of? What's it in the ETF of?
Bear with me, let me take a look.
Do you know?
No, not off the top. I just
Okay,
know.
just a chart, doesn't matter. Okay.
Yeah, I don't look too much into fundamental things. If I see
Okay.
something in trend, I will
Okay.
trade it. So
Okay. And what's that BRZU, Brazil?
yeah, that one is a Brazilian share. This is another one. I just was trading strictly for order flow. I saw order flow coming in, so I'm pretty much just trading range over here with this one.
Okay, and in the year you've been doing it, what's the most important thing you've learned?
My risk management. That is the biggest thing I can stress to people. It's not even anything else is like comes second to me. If you can't manage your risk, you're not going to be able to trade. You can be a great trader, but then you'll end up with 1 or 2 trades that'll end up wiping your account. So if I could stress to anybody, find out a risk plan before you can actually start trading and figure out what you're able to handle as far as position sizing goes and how you're allocating your capital.
And the best way for people to get in touch with you is at Hackerman Ace on Twitter.
Yeah, they can reach out to me on my Twitter, or they can reach out to me on my Gmail, hackermanace@gmail.com. Either or, I'm available at any time. So if anybody has questions or anything, I'm more than willing to help.
Okay, well, it was really nice meeting you, Ace. You're my youngest trading warrior brother that I have.
Yeah.
Yeah, so little brother, trading warrior brother, I wish you a long, prosperous career, and just keep this in mind. Trading is what you do, it's not who you are. And be patient, not only with the market, but with yourself. And I hope pips rain down on you.
Yeah, thank you very much, Dale. I appreciate it. This was very
Yeah,
fun.
great meeting you, and I'm rooting for you.
Yeah, thank you very much. You have a good day.
All right, that's it, everyone, for Wednesday, and that's Ace Hackerman. You can follow him on his Twitter handle at Hackerman Ace, who's looking for a potential high here short term in the S&Ps. You know what, I am too. And the sell-off, I think, is going to happen into Thanksgiving. He's thinking a decent repeat. So thanks again, Ace, and everyone else. Have a great day. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. You're welcome, Brock. You're welcome. You're welcome, Chachan. Gautam. I'll see you.